Okay, my lovely friends, here we go. It is Thursday, March 31st, 2022. All kinds of things are going on right now, and we are going to put it all together. Let's start off with this market right now. There appears to be a safety trade going on. What am I talking about? You got a 10-year yield dropping, you got a stronger dollar, you got stock futures in the red, not by much, but in the red nonetheless. So what's driving this? Several things, but number one is apparently there's talk that Russia is about to mount a major offensive on several Ukrainian cities, and the market doesn't like to hear that. So anyway, that's the setup this morning. Safety trade playing out pre-market. Let's see if this turns out to be a fear trade. Regardless of that, people, you know my take on this. This market has literally gone straight up since the recent low. So, I mean, no asset goes straight up. No asset class, nothing goes straight up without, a little bit of a corrective phase or something along those lines. And maybe we're going to get it. I mean, we need it, to be quite honest now. There's a few other things in play here. And I want to talk about some economic news that we got this morning. And I'm going to give you one guess. It was terrible. Actually abysmal. Some of it the worst that we've seen in over 40 years. But anyway, let's stick to the market just real quick here. So on the back of this safety trade playing out to maybe into a fear trade, we got crude oil this morning down substantially. Why? Well, two factors. Number one, our illustrious president, you know what I'm going to say, or wanted to say, a lovely president. How about we just call him our lovely president? Because he's just a lovely man. He's talking about a massive strategic oil reserve release, and that is definitely hitting crude oil right now. And then we have OPEC talking about a boost here with regard to output. We'll see how that plays out moving forward. It's all a freak show. It's all a game. And I really think they're playing a pump and dump with crude oil. If, in fact, our lovely president decides not to release this massive amount of crude oil, well, you're going to see crude obviously bounce higher. And we'll see what OPEC does. They're always talking out of both sides of their mouth. And with regard to these Russian offensives on cities here in Ukraine, well, that's not good for crude either. But like I said, I think they're playing a game with crude oil. My take, it's going much higher. You know that. All these other things with strategic reserve releases, with regard to what OPEC may or may not do. These are just like little Band-Aids that they're putting on a major problem here. And look, they are going to throw, and they already are, an energy crisis on us all. We have this cost of living crisis here, an inflation crisis, and based off of some of the information that we got this morning. Let's talk about that. Let's start off with this. So this is the economic news we got. So jobless claims came in higher than expected. I'm so shocked about that. Inflation comes in hotter than expected, and people are suffering. They can't make ends meet. Now, we found out yesterday here that fourth quarter GDP came in lower than expected. Now, the news from today with regard to that is retail sales crater, understanding that the U.S. economy is 70% driven by retail sales, where you can see where we're going moving forward. People, look, like I've been explaining to you, there's all this talk, recession, there's a recession, A recession would be a step higher from where we are today. Just so you know. But they want you to focus on that. They want you to focus on yield curve issues, which most people have no clue about anyway. So this is another thing I want you to take out of today's video. You and I have discussed right here in this lovely video. I've gotten angry about this. I pretty much went off the deep end on it. I've explained and you know this to be true, that rate hikes alone will do zero with regard to surging inflation. Again, our report today, inflation is higher than expected by the Federal Reserve's own numbers. Now, Credit Suisse here, which is a global investment bank, I think most of you know that, they're admitting that listen to this, rate hikes alone will not tame, according to that's their word, not Greg Mannarino, will not tame inflation. Can I please get a duh? No, it's duh, duh. No, it will do nothing, especially in this environment. Look, you know this. In order for if the Federal Reserve would have to raise rates so dramatically to do anything about inflation, they would have to raise the benchmark rate above the current rate of inflation. They will never do this because it will crater. The stock market would fall into a black hole, okay? And they're not ready to do that if they were to raise rates so aggressively. Look, in order for the Fed to do anything about this, not only would they have to raise rates aggressively, they would have to actually taper, they would have to stop buying assets, they would have to stop buying mortgage-backed securities, and they would have to stop funneling dollars around the world. On top of that, they would have to stop the propagation of this crisis to crisis to crisis environment that we are in. That's what our economy functions on, because it's debt-based. And I've explained to you that the debt-based economic model is the greatest threat to human life on the planet Earth. And they will do things like create wars, expand wars, drop bombs on anyone, kill millions of people to keep the debt-based economic model going. In other words, to keep debt being pulled from the future to just fuel where we are now. And it must be done in greater and greater and greater amounts. It can't stop ever. So knowing this, you're going to continue to see inflation skyrocket out of control. You're going to see people continue to get eliminated. I'm referring to the middle class for the most part here. And it's just a freak show of the truly a disgusting highest order. But you knew this already, people. Look, everything that we're seeing here, you knew was coming. We knew, you and I have known this for years, and we are here now. But I'm going to tell you again, you haven't seen a damn thing. So anyway, just in summary here real quick. It appears that we have right now safety trade. I love that. Think about how asinine this is. You got cash making its way into the safety of the debt market, henceforth why you see the 10-year yield drop. Knee-jerk higher in the dollar. Oh, I want to hold dollars here. Yes, I want to hold dollars in an environment where inflation is out of control and about to get much worse. Brain dead. I'm telling you. This is brain dead individuals participating in a freak show market. You understand? It's really the truth, honestly. So we got that going on. We'll see if we get, a fair trade, which this market needs to bleed off anyway. We have several more rounds of abysmal economic news. It's not going to stop here. You can count on that. We have this issue with crude oil, which they're just putting Band-Aids on it because, again, we are in the very early stages of a massive energy crisis here. And then we get to this admission here from Credit Suisse. Rate hikes alone aren't going to tame inflation. Make it up. People, look, my challenge to you every day is make any of this stuff up. Try to do it. See if it's possible, because I am not that creative. Maybe some of you are, but this has gone so far beyond, and I mean beyond. All right, look, so that's it for today. Well, for now. I will see all of you later. We're going to sum this up. And, look, who needs to watch any kind of like a sitcom? Because this world we live in is the biggest sitcom on the face of the earth. And people are getting killed, literally, and they're getting destroyed. I don't know, man. It sometimes really gets to me. Please share the video. I will see all of you later. And that's it.